have a look at where we are on the markets. We edged just a little bit lower, as you can see. Relatively quiet day, it would appear, forming now. The data notwithstanding that we'll get in 24 minutes' time, but people obviously very focused on the long weekend ahead. First day of trade, nonetheless, for the second half of the year. Let's get some second half picks. JJ Burns is president of JJ Burns & Company, and Yu-Dee Chang is principal and chief trader with Ace Investment Strategies. And Yu-Dee, your trade for the second half of the year is the banks and the financials, the XLF. Why?
Well, the banks and the financials, I like it on a trading basis, no doubt about it. I think there's a lot of storyline on it. They do have pretty strong lobbyists, as you can see by this transaction fee incentives. I think they are getting rid of some dead weights, which is helping their bottom line. Also, on top of it, I think this mortgage investors' so-called liability problem is finally going away. So I like the financials on a trading basis.
JJ, you're much more defensive with the sort of picks you're coming out with here. Johnson & Johnson, Procter & Gamble, Varian Medical Systems.
Yeah, Simon, if you're going to be in stocks, and we have greatly diminished our percentage allocation towards stock, way below our normal average, probably in the 25 to 35% range. But if you're going to be in stocks, I would be in the high growth players that deal in cancer or healthcare, like a Varian Medical Systems, or you're going to be in a higher dividend paying Johnson & Johnson, Procter & Gamble. The more important thing is that we are in a slow growth economy. It is not getting any better. We continue to kick the can down the road, as Greece is doing with their debt, and we still have, and growing, 1 in 4 people that have mortgages that are upside down in the American economy and housing is not getting any better, and jobs are not being created. So I'm sorry I'm not bringing good news on this 4th of July, but that's the extent of where we are in the economy.
Yu-Dee, we've gotten some indications that China is slowing down, much of that perhaps manufactured by the government itself. When you look to buy a big name like an Exxon, a Conoco, anybody in the oil or energy space, how much do you have to watch China and what their GDP comes at?
A little bit. I think Chinese growth is definitely slowing down. But if you have been there yourself, then you will understand the growth is still going to be there. Thus, I think the oil majors is definitely still a place to be, especially after the recent correction. Also, actually, coal is actually still abundant full of resource, which China uses a lot. So I will watch some coal mining company as well. On top of it, a more speculative play on the energy will be the natural gas market. That is something that maybe are darting again if it could get its price back up again. So people will be interested in putting some money in to develop these so-called natural gas mines.
Yu-Dee, that isn't what's happened to the market, though, is it? Since 29th of May, I beg your pardon, 29th of April, we have had something like a 17% decline in the price of oil. So all those long-term things that you so correctly mentioned and we hear almost ad nauseum on the television are true. However, laid on top of that is a very violent move down on the price of oil.
No doubt about it. I think if you look at the energy market, it does swing a lot, especially with the price of oil. To be exact, from the top to the bottom, oil has corrected about 22%. But if you look at the supply and demand picture, like I said, although China is slowing down, Brazil is slowing down for that matter. But if you look over the world, we still do have growth. Slowing down, they're still growing at around 7 to 9%. Even U.S. still growing at about 1.8%. So I think this so-called demand for energy is still going to be there.
Simon, if I can add to that interestingly, there's more growth that's happening in China with a per person. In the United States, there's about 19 to 20 barrels of oil that are consumed in this country. In China, that growth is going from 1.5 barrels of oil up to as much as 3 barrels of oil, and they have a population that dwarfs the American population. So I think Yu-Dee's points are pretty spot on. But more importantly, we're going to get raw materials inflation coming in. We see it happening already. The issue right now with China as a government is they're seeing more bad debts coming into the government. And this contagion that's happening from Greece and Ireland and Portugal, and even in this country where we could have trouble potentially repaying our debts, is going to continue. And it's going to, like a bad disease, happen in other governments, because that's what's going on in the world.
I hear you. I don't dispute anything that either of you have said, but as with all these things, it's about the timing of the dynamic. We have to leave it there, guys. Thank you very much, JJ and Yu-Dee. That brings us to our street poll this morning.
Where do you think the S&P 500 will be by year's end? There are your choices. Vote right now. sots.cnbc.com.
Interestingly, as the S&P is now at 1318, only